Even though global markets sent mixed signals, India's retail investors hold it firm. Monthly SIP inflows rose again in July 2025, underscoring unwavering participation. In this Independence Week, we hope that your financial journey reflects the same resilience and earns you the financial freedom that you desire. Welcome back to Signal, where noisy markets meet simple, sharp and sound insights for long-term investors. For the week ending 14th August 2025, Sensex closed around 80,600 points, marking a modest recovery from its recent losses. The Nifty ended about 24,600 points, effectively snapping its 6-week losing streak. These gains were driven by optimism in banking and auto sectors, as well as easing geopolitical tensions. Metal stocks extended gains for a third straight session, supported by weaker dollar and rising hopes of US rate cut. But profit booking towards the close capped the rally. In conclusion, domestic optimism in financials and discretionary consumption supported markets, though US tariff fear continued to stoke markets, especially in export-heavy sectors. Do you know what happens when millions of investors make disciplined investing a habit? AMFI's July 2025 numbers have the answer, and it is a record breaker. Equity mutual funds recorded 42,702 crore in net inflows, a jump of 81% from June's 23,587 crore, marking the highest monthly inflow ever. The industry's total assets under management hit a new record at 75.36 lakh crore compared to 74.41 lakh crore in June. And SIPs, they hit the record too. The monthly subscriptions reached 28,464 crore with 9.11 crore active accounts. And just for the perspective, in July 2015, the industry's assets under management was about 13 lakh crore compared to today's stellar 6 times higher 75.36 lakh crore. Back in 2007, while I was working with one of India's largest AMCs, we had envisioned how mutual fund industry could and would grow over the years. We were confident, hopeful, and a little bit skeptical. It is such a gratifying experience to see how millions of disciplined investors have come together, contributed to success, and turned those visions into reality. If you have contributed to this success, many thanks and cheers from HB Private Wealth Advisory. Let's look at top 3 reasons of this surge. Firstly, investors took market dips as buying opportunity to invest in India's long-term growth story despite global headwinds. Secondly, there is a growing appetite to invest in growth-oriented funds. Small caps rose by 61%. Mid-cap rose by 38%. Sectoral and thematic, hear me out, 1,881%. Thirdly, retail participation through SIPs demonstrated consistently growing monthly active accounts and contributions. July's AMFI numbers are impressive, but what can we learn about disciplined investing over decades? Let's run a simple test. What if since January 2000, you invested 2,000 rupees every month in 3 different avenues? A fixed deposit, a debt mutual fund, and an equity mutual fund. And where would each of these stand by in July 2025? FD at an average of 6.5% per annum would be about 15.32 lakh. Debt funds with an average of 8% per annum would be about 19.28 lakh. Equity with an average of 13% per annum would be about 43 lakh. Same money, same time frame. Why such a big difference? Because over long term, compounding at higher rates in equities creates a much bigger snowball effect compared to debt funds or fixed deposits. Safety has its place, but long-term compounding has its own unique, powerful ecosystem, and that's where wealth is built. Now that brings us to quote of the week by Albert Einstein. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So what's the takeaway? The earlier you start, the longer you stay invested, the more you allow compounding to work in your favor. It's not about chasing quick wins. It's about developing consistent, disciplined habits that will help you multiply your wealth over time, whether it's through SIPs, dividends, reinvested gains, or adding ad hoc bonus contributions, or not accessing your investments until absolutely necessary. The real key is patience and discipline. What's your compounding strategy? Do let us know in comments. For the story of the week, let's spotlight on the journey of Ragini, who is a friend and a former colleague that I know since early 2000. Back in 2003, Ragini was introduced to mutual funds by my brother, Himanshu. Ragini had just started her career in insurance, a role that gave her an early understanding of financial planning. With no mortgage and stable income, Ragini started her investment journey with a humble contribution of 1,000 rupees per month. Within no time, she stepped her SIPs from 1,000 rupees a month to 2,000 to 10,000 to 20,000 rupees a month. She developed a habit of increasing her savings month by month. Any bonus she received went straight into her gradually building investment portfolio, and she accessed that only if there was an absolute necessity. In 2007, Ragini migrated to Australia, which led her to pause her SIPs while she was settling in the new country. But her earlier investments kept compounding. By 2010, after initial migration adjustment period, Ragini restarted her SIPs, initially with 2,000 rupees a month to gradually increasing it to 5,000, then 10,000, and eventually ramping it up to 50,000 rupees a month by 2011. In a recent conversation, Ragini stated that the only way she could see herself saving money was by making these SIPs compulsory for her to save. Otherwise, she would spend that money. If we project Ragini's portfolio by using long-term average annualized return of 12% per annum, her disciplined contributions that started with humble 1,000 rupees a month in 2003, gradually increasing it, withdrawing when absolutely necessary, pausing it when needed, and restarting when her situation improved, has resulted into her portfolio worth 8 crore rupees and above in July 2025. Ragini's story shows the power of starting early, staying consistent, and letting compounding do the heavy lifting. Do tell us in comments, how consistent have you been with your portfolio? Next week in Signal, we'll break down the August inflation numbers and explore why large cap and ELSS funds are in focus. We are building a strong community of dedicated, disciplined, and dynamic investors. If you're one of them, why not like and subscribe us and tell us in comments, what's that one habit that can bring you closer to your financial freedom?